Hello and welcome, Rahul. If you're watching me on my YouTube channel, Upper Talk Show, and if you're watching me consistently, welcome back to my channel. I try to inform you of latest development in a way that can help you always to move forward. Because I talk about latest development in science and technological field, about AI and its advancement. Sometimes I talk about personal finance. Sometimes I talk about metaphysical reality. Because if you want to change your paradigm, if you want to really vibrate in high frequency so that you can attract clarity and abundance, it is important to be intact spiritually as well. Sometimes I talk about that, so all these things are important in your life. It is better to have certain knowledge rather than scrolling up and down for futile reels. If you're going to dissipate away your time, it won't benefit you. But if you listen to good people who are really giving you novel ideas and information based on which you can enhance your business activities and can make your livelihood better, what could be better than that? So that's why I try to tell you that invest your time in such kind of things which can amplify your knowledge, which can enhance and can make you a skilled personality, because everyone is having a mad scramble for a better livelihood. And if you want to excel in all these opportunities, if you want to please the real opportunity in your life, it is essential that you be visionary, you be someone who can have clarity that how to make himself better, how to utilize his time, because time is real money. Time is something that can pave your way towards success. And if you flow with the time, nothing will prevent you. And if you go against time, then time and tide wait for none, or it is known to all the persons. And sometimes I talk about banking and finance because I have a long experience. I have been working in a bank for more than 13 years, so these experiences are with me. So sometimes I talk about personal finance as well as banking and finance that can help you. So if you want to really amplify your personal finance and your business activities, you can listen to me. I will give you a little bit of insight. How what is happening. Financial world. If you talk about personal benefit, or the things that are related to you, it is not much more. It could be huge, but it is not much more. If you will give your focus for personal finance, where you can invest, in shares, in mutual funds, in stocks, already I've told you shares, in bonds, sometimes in debentures. So all these things, commodities, actually financial market is a place where goods and services and commodities are sold, are exchanged actually. So this is the financial market. So what do we have to understand exactly? What are the things that are related to us? And if you are really a person who deals with bank, you will think of a small saving schemes, like PPF, like Sukanya Samriddhi, like a small deposit schemes, like fixed deposits, like senior citizen deposits, all these things. If you want to make a deposit, or if you want to take loans. So a little bit I will discuss here about loans. Bank actually gives you two kinds of loans. One is term loan, which has a term. It will give you maybe medium term loan for 3 to 5 years, or long term loan for 7 to 10 years. Or certain demand loans as well. So it comes in terms of overdrafts or open cash credit, or you can say that loan against deposit. So these are certain loans and opportunities that banks provides you. Actually, there are two types of credit sector in bank. One is corporate credit, where they finance huge corporates, big corporates. Loan amount is bigger, but it is actually concentrated. So risk is huge because they are giving bulk money to a particular corporate. And there is also a secondary one that is called retail segment credit, where they give loans to retail customers like housing loan, like personal loans, like car loans, like pension loans, like jewel loans. All these are retail loans. Some are MSME loan. It is also, you can say that it is not corporate credit, because medium, small and micro. These are the industries which are coming in retail segment as well. They diversify their risk because they want to secure their assets. Loans are actually assets of the bank. They generate income for them. So that is why they try to diversify their risk. But the expenditure cost is huge. They have to manage a lot of premises. They have to manage a lot of employees as well for giving these retail customers. They have to capture the market, in different regions as well. But the cost of corporate credit is low, but risk is huge. So these are the two types of credit on macro level. But when it comes in segments, in retail, there is a lot of versatile kind of loans. There is loans against deposit loan. These are the secure loan. Housing loans where you have to do mortgage. So bank has security. There are two kinds of security. Primary and collateral. So actually, whatever banks is financing to you, they create a security for that. Whatever they are financing, if you want to buy stocks for your business, so those stocks will be the primary security of bank if they are financing against the stocks, open cash credit. But sometimes they ask for collateral. If the loan is up to a limit more than 10 lakh, and 20 lakhs, they ask for certain collateral. So maybe your property will be collateral, maybe liquid deposits could be collateral, shares of different companies could be collateral, government securities, bonds could be collateral. So all these things, KVPs, all these things could be used as a collateral. So bank finance is not bigger than you think. And if you talk about term loans, how they finance it for your machineries, for your requirement of machineries, land, building, furniture and fixtures, they give you term loan. But for your everyday activities, for bringing raw materials, for paying employees, for paying your electricity bill, so every day's process and processing, you need working capital. For that, they finance working capital. So it is also not a huge term. They actually provide you 20% of the future sales. That is what they call turnover. 20% of that. Most of the finances, in retail, are based on that. I have talked about how they finance working capital in detail on one of my videos. If you search that, you'll get that. And I have told you exactly, systematically, how banks usually do their evaluation, for their working capital. But I'm not going to talk about that here, in details, because I'm talking here simply the terms, what you should know about finance, because I want to give you a little insights. If you will be educated, if you will be really knowing all these things, it will help you in future. That is why I'm talking about it. What could be the banking? It is not huge term. People are afraid of that. Maybe finance and all these things are huge. It is not huge. It is very limited banking in finance. If you have insights, you will understand exactly that. I will talk about financial market as well, money market, primary and secondary market as well. But maybe it will, if the time will be there. So I was talking about term loans, and working capital. And they actually finance 20% of future sales. Most of the evaluation is done upon that. Or the secondary, they take, they evaluate working capital gap, your current assets and your current liabilities. They minus that they get that what working capital gap, because it should meet, So whatever gap is there, they actually finance 75% of that. Whatever your asset, current asset, your liquid and current assets, they take it and they minus the current liabilities. Whatever is your current liabilities, short-term liabilities, they minus that and they get certain amount, what they call it a working capital gap, and they finance it 75%. because they want to bring 25% margin. They call it margin because for good disciplines, borrowers has to bring their own money. That is what they call it margin when they bring their own money. That is why they finance 75% of working capital there. They also evaluate turnover, 20% of turnover, whatever is better, they try to finance that. So it is not huge, it is not big. So you understood your term loan requirement, you understood your working capital. Later on, they evaluate your balance sheet each and every day for revival, for renewal of that way term loan, because that way working capital, because it is a demand loan for 12 months that usually give you. So after that they review it, and review will be done on your strength of your balance sheet. That is what you have to understand. They analyze that, they finance that. So you understood, term loan and working capital. I am telling you, retail loans are the retail segment, personal loan, pension loan. These are unsecured loans because they do not keep any collateral against that. If you are a salaried person, they will finance your personal loans and pension loans. But your home loan is mortgaged. Whatever building is making, the land upon which it is being made, they will mortgage that. So they have the security, they have the security for that. They are creating charge over your primary asset. So this is a secure loan. Better than that, gold loan is also a secure loan. You are placing your gold to the bank. Next thing I want to tell you, all these things that you understood. Next thing I tell you, that bank, beside that, what is the function of bank? Nothing else. Bank guarantee, there is so bank guarantee for your performance. If you that your client, bank's client, are going to perform any task, they want to take any any work, then the provider, most of the time government departments, for road constructions and for other things, they usually ask from from that very person, who is going to build, who is going to take contract. They want guarantee, bank guarantee, because they have less credibility, on that very person. So they ask bank guarantee. So usually bank provides for their clients, guarantee, a performance guarantee. It is non-financial guarantee. They don't provide money, but they give a guarantee, to their, whoever is providing that very contract to them, in behalf of their clients, that if the client fails, they are going to pay the money. So risk is involved somewhere, but they are not actually paying the money. They are taking a promise that they will pay on behalf of their clients if the client fails. For that they charge certain money from their client. So this is the money that they get. That is what the business is being created out of that. And that is what banks usually do. So bank guarantee, you understood exactly. Performance guarantee and financial guarantee, these are the two mostly type of the bank guarantees, and most of them are mostly performance guarantee, because their performance are being evaluated by the, service bidder or whatever you say, and that is what they think of. So bank usually gets that. Secondary is letter of credit after bank guarantee. Letter of credit, in export import, they involve bank for the same thing. Credibility is low, so they will ask for letter of credit. They will involve financial institution for better transactions. They will give a letter of credit. So what will happen? Trade will be facilitated easily, and they are being recognized from the regional banks. Banks are being involved. So better clarity will be emerged and business facilities will happen. Secondary, bill discounted, bill purchase. This is also a function of bank. That is what I am telling you. I will make you clear today all the functions of bank. Bill discounting is same. If two persons are exchanging in a business, certain services or goods are being sold to other person, then what will happen? They have a working capital requirement. Whoever is exporting the goods, whoever is selling the goods, they have working capital requirements. But whoever is purchasing, they may not have that very money, but they want to take that very good. And then after some date, they will repay that. Usually it happens in 45 days, So what happens for that very time period? The seller don't want to lose his working capital. So what he will take a bill of exchange from his buyer, and it will it will go to his bank and it will sell his bill. So that bill will be purchased by the bank, and bank will get money from the buyer, in some case. Or if it's a user's bill, after some day it will be fixed that on that very date money will come. In user's bill, what will happen? They involve both the personality, buyer and seller. What will happen? They pay the seller. Bank will pay to the seller initially, but after certain date, the money will come into the bank and it will be liquefied. But if it doesn't come, it may be in certain case bank have recourse to get the money from the seller, and that is what happens in user's bill. That is what is the bill discounted. But bill purchase is different. All the responsibility goes to the bank in bill purchase. They actually becomes the owner of the bill. They purchase it from the seller, and they are the whole responsibility. They have to get money from the buyer. And if certain fails, buyer doesn't pay the money, then the loss is to the bank, not to the seller. So this is bill purchase. This is the minor difference. Many people don't understand what is bill discounted and what is bill purchase. So this is and in exchange they charge certain interest and the fee. That is only the commission, that is only the business opportunity of the bank, and for that they work. Sometimes, these are the most of the functioning of bank, and deposits and withdrawals of money. These are the primary functions of the bank. So all these things are involved. Little small services, small saving schemes that they provide. So these are the functioning of bank. Sometimes foreign exchange. I will talk about it in deeply in another video. The video is getting longer. Foreign exchange is also a part of bank where they use a spot rate, and all these things to do foreign, money transactions on behalf of RBI, whatever they have been given opportunity somewhere. So for currency exchange, they operate, So I will talk about how they use it. I have knowledge of that, but I have to go through again because I know exactly what is a spot rate, and how they are being exchanged, how the money are evaluated, I will tell you about it in detail. I have gone through and have clear knowledge of that, I will tell you about that. Video is getting longer. Thank you for listening to me.